Hello, Warriors. Good ECB day. Bran, how are you? AJ, welcome to F.A.C.E. First time I've seen your name. Sinatra, Alexander, team. Everyone doing okay? Everyone
Hey
ready
Dale.
for everyone ready for Lagarde? Everyone put
Don't
their
know about that.
put their suntan lotion on.
You have to be on guard for Lagarde. Oh, good one.
That's
Oh,
pretty
No.
good, Stel.
I thought we
That's why.
banned you for no jokes.
Morning.
Okay, so let's start with the euro.
You
I
know,
know.
Alexandra, my daughters keep telling me I say dad jokes. You're right. I suck. Carry on. Sorry.
It's all right. Well, your daughters love you, though. They don't care.
Usually.
They're just teasing. They're just teasing you. So, start with you, Ryan. What do you do with the euro into the ECB? Do you think there are still people that have a count that we're still going to head up to 108-ish?
I think it's possible.
It is okay. I mean, this kind of candle makes it like, a slog to get up there. But that there's one more high coming there. Dollar turned at 103, but we could do something like this and get to about 102 and a half and then start another dollar rally. So do you just watch the ECB?
Well, I'm already long.
You're long euro? Okay.
Yeah, I decided to buy the dip. I didn't see any material reasons why Credit Suisse was in trouble. So enough was enough for me. And a bit like the S&P the other day on the US stuff, I decided to get in. I got in at 105.40. Wanted to get it a bit lower, but it never quite got there down to that 105. But I'm happy to sit in this. The ECB, we're either going to get a 50, a 25, or some say a pause. If we get a pause, that'll be the biggest shock, and I think that's when you see the euro move back down. But if we couldn't break or get down to that 105 on a bank going pop, I doubt we're going to get down there on the ECB pausing rate hikes. Never say never, of course. I think a 25 is what largely the market is expecting. So we may see a bit of a dip if it is a 25. If they go the 50 though, I think we see 107 in a flash. And if they completely brush this banking stuff under the rug and say they're keeping an eye on it, but they're not overly concerned, I wouldn't be surprised if we see those 107.60 highs, maybe even a wander to 108.
Okay. What did the government of Switzerland do for Credit Suisse? What was
50 billion Swiss backstop?
50 billion. Okay.
Yeah.
Because I saw the guy from The Big Short was on, and he made some type of comparison that Credit Suisse's liabilities were 800 billion or something like that, and the whole net worth of Switzerland was less than that. So he said they were going to have a tough road to slog to stabilize it. But everyone's buying it. This 50 billion's enough.
Well, Credit Suisse are, I said this morning, they're the weak link of the European banking mob of the big boys. They've been under the cosh for bad judgments, bad trades, bad management, bad everything for several years now. And, if you were going to hunt someone after the US bank stuff, they're in the frame. I mean, I said on Friday when the US banking stuff first started kicking off, jokingly, I wonder how much exposure Credit Suisse have got, because if there's a crisis, they've got a finger in a pie somewhere to do with it. And that's the nature of them now, and everyone knows it. And everyone, it's the path of least resistance if you want to go and attack another bank that's pretty weak. US banks apparently have been reducing their exposure to Credit Suisse over the last few months. That tells you a story on its own. They're the weak link.
Okay. Let's move on to yields and yen. So, so far pretty, just trying to hold this level here. What do you think? Take it out? Take out this low?
Yeah, I don't like the way it made a new low. Yeah. I don't like the way it made a new low after that Monday banking low.
This one?
Yeah, and
Okay.
you know the bounces are looking weaker and weaker,
They
so
are.
I wouldn't be surprised to see it head lower. But you know the fate of the dollar rests in the ECB today.
Okay. 10-year. So 10-year, I see the potential of a 3 setting up, maybe down around 330. But yeah, this looks like you know, there's still lower lows. I've seen targets as low as 310 for the 10-year before it starts turning up again to make new highs. So, gosh, you know, down here. But the first stop is, I think, 328 is a level right here. So still looking soft. So that means lower yen, higher metals. I just saw something in gold, and I may have made a mistake. I came out of my miners yesterday because they were lagging so bad. But as good as gold looks, look at that. So we'll see. Looks like that too is setting up 3 at new highs. Silver, you know, maybe it's a failing rally and we still get a pull back to 21. So I don't have the same level of conviction of in anything as I did last week. So I'm just looking at Kman. You around, buddy?
Hi.
Hey, how are you?
Yeah, not too bad, thanks.
What do you think about the management of the yuan here?
It's hanging around.
Thank you, Ryan.
I was looking at it. It's tough to make up one's mind right here. I think if it goes back to above 690,
right here,
1.5, 92, then we get another. That one we get another shot at 7. It is so that more so than versus dollar, Chinese yuan is slipping and sliding versus quite a few others. I think as I was saying already last week, the investors market are probably not really liking the fact that Xi is now also handling the Chinese finances more than before, and with geopolitics the way they are, we could see another move lower in the CNH before considering the real reopening. You know, after some more time, just some more time. I think it's a dangerous little one. I'm rather buying this dollar China on dips than selling the rallies right here and now. But then,
okay, go ahead.
But then there's the issue of the dollar, because yesterday we had some wicked data, and we are expecting another slew of data coming out in 20 minutes. Then the other side is the dollar. So I don't know. It's a bit of a difficult one to me, at least in dollar China. But if I do anything, it's probably buy a dip in those 680s again.
You know, the Aussie was the most orderly on the pullback here, and you know, to me, you know, we talked about it when things like cable were putting in, and cable held, I think, much better. I think it looks much better than euro. I mean, look.
I thought it would even hold better than that.
It held pretty good. I mean, pushing over 122 to me looks more probable than this going to 108. But you know, maybe you know you get a slingshot here. But cables still look good, and Aussie was orderly. Maybe Aussie's going to make a move towards 68 here, especially if risk is stabilizing.
Yeah, we need risk to stabilize, right?
It has.
The Aussie will have, to me, when I'm looking in parallel to my own charts, if we get back above 67, 10, 20, that may be the sign on the Aussie dollar. And we had a good jobs report out overnight, so it had much more impact on Aussie Kiwi, for instance, than on really Aussie dollar as such. But yeah, we had a pretty good jobs report out, and Aussie Kiwi looks to me like we might be having seen the bottom on that pair for a little while. Yeah, the Aussie dollar will depend on probably US data as well. If they continue to be a bit sluggish, then I can see Aussie dollar starting to move up again.
Okay. And why don't we bring Stella?
Have you looked at oil yet? Have you looked at oil yet, Dale?
You know, it's headed towards the low 60s. Should be due for a bounce.
Yeah, look at it on a broader picture. The 62-67 zone has been like go on a daily or a weekly, and then you look at that 62-67 zone and zoom out, maybe even into 2015, 2016. It's been always like a bit of an equilibrium zone in my opinion. So
are you probing it down here?
I don't know, but I think it would be a bit traumatizing if we break sub 62. That's still $5 away, which in percentage is a pretty big move, but in the speed of what we have seen over the past sessions, we could be there in a week's time or so. I don't know, the 62-67 zone, and we can also not forget that SPR bias should be around here in this area. But I think if it would break sub 62, then I expect some OPEC moves or other people's moves to try and hold it up. So it's
in the washout phase, right? I mean, it went over the Niagara Falls really a year ago, but this is the last ride down, probably.
Probably, I'd say so. I'd say so. I mean, if really get the which I would qualify as an extreme right now in current situation down to 62, I'm probably going to give it a try there. Catch a knife, put on my butcher's glove.
Yeah, you may want to consider oil shares rather than just crude, because they held up so much better. And anyway, they you know, XLE finally broke down, but all last year after crude peaked, XLE kept going up. The oils carried the market last year, actually. So here it is. We broke down under 82.5. But compared to what, while crude was peaking, this is what the oils did. So at least you have a low. You have a low for a point of reference. Yeah, maybe this is just a correction, and we're not going to take out these lows. But I think it measured low 70s. This low formation here, you know, it was a descending triangle breakdown. So, yeah. There's going to be a time to buy it. I don't see it right now. In fact, I think a lot of things, there could be some inflection points next week. I've been talking about the Fed and the vernal equinox coming in at the same time. I know some other cycle guys that had the S&Ps in a similar analog to what they just did, that they needed a certain amount of days before they based, and came in March 20th too. So I think next week's a potential inflection point for a lot of markets. How about Bitcoin, Stel?
Bitcoin, don't ask me about Bitcoin. I don't know. I'll tell you this though about ECB today. I think, and then we can talk about Bitcoin.
They're going to convert the euro to Bitcoin.
Yeah. I think yesterday, Christine Lagarde was probably on the phone to a few European banks, maybe the French ones. She's French, maybe Deutsche. I'm sure the ECB will want to know the extent of the risk that European banks are facing. So I think, even though, you know, we discussed this at length from the Flow Show this morning, even though hiking 25 or 50 really doesn't make much difference in terms of monetary policy for banks, it shows it will change sentiment. And I still think the ECB is going to do 25 today. Is it a hawkish 25? Maybe, but I still think they're going to do 25 today, just to try and contain this issue, because let's face it, the S&B stepped in yesterday and they're guaranteeing, they're giving a 50 billion loan to Credit Suisse if needed. The situation hasn't changed at the moment. We have a failed American bank, and we have a not failed, but close to failing major European bank, Swiss bank. So for me, the situation is contained. I don't think so. So.
Hey, Stelios,
Hey,
can I jump in?
What
here?
is it this time?
No, well, it's just me being annoying. But I just wanted to comment on what you're saying here regarding rates. One of the unintended consequences of rates going higher as quick as they have globally is we're seeing like the fallout from it, right? I mean, is banks going to be susceptible to credit crunches as rates go up like this, or what do you think?
Of course, they are going to be
The answer is
susceptible,
yes.
and the problem that banks are facing also is how do the banks make money? They borrow at low rates, they lend at high rates. When the curve is this inverted, their core business is screwed. So it's not an easy situation for banks, and that's why you see all the bank CEOs speaking and voicing their concerns, because this is not a good environment for banks. I mean, it's terrible actually. So, and added to that, we have this uncertainty which could spill over. And if there is a rumor about a bank like there was for Credit Suisse, I mean, I don't know what CS had, what they have in their books, but suddenly there was a huge outflow of money from them, right? So if the next name is, I don't know, BNP, then it's going to be an outflow there, so they're going to need support. So it's very delicate, and I think the ECB will want, and all central banks will want, to put a stop to this, to just bring back.
Yeah, what happens to Deutsche Bank? I mean, you guys don't forget about them, right?
Deutsche Bank have had for years and years the biggest derivative positions by a mile. So they're very dangerous. And Deutsche Bank equals Germany, right? So, if something happens to that bank, we're all in deep trouble. So, I'm not sure this is over. Go on.
Can I just counter your point on rates and banks? I mean, hasn't everyone been moaning that banks aren't making the margin because of low rates? And now rates are going up where they can make the margin on mortgage products, on savings products. Now rates going up is bad for banks.
No, they want the long end to be going up, not the short end. That's the thing.
Yeah,
that is one thing, because they make the money from the difference of the two durations. But there is another thing as well, which didn't used to exist in the past. Many of these are invested in bonds that were extremely expensive when they bought them, right? And they're now losing value because yields are going up. And there is a third element to take into account here, is we know, I mean, that is a fact for many, many years now, there are a lot of zombie companies, big zombie companies all over the developed world, and probably not only the developed world, that have been surviving for years and years just because their cost of borrowing is practically zero, right?
You remember the band The Zombies, Steve?
So
I do.
No one told me about her, the way she lied.
So there is also the extra danger that eventually, with yields going up, a lot of these companies are going to fail because they could barely service their debt when their debt was practically almost free to have. And many of these banks hold the loans to these companies, right? So in general, we've built a financial environment for the past 20 years, practically 15, 20 years, that although it should be healthy to have higher rates for banks, counterintuitively, it isn't.
Also, another thing, who owns bank debt? The other banks, right?
Yeah,
there's a lot of
that as well.
Ownership, so that's very dangerous. Anyway,
yep.
And people talk about credibility of the ECB and the Fed. There is no credibility left. Okay, so let's get that out of the way.
Yeah, for those that understand things, yes, there is absolutely none.
All right, guys. Well, hey, Dale, we got like 10 minutes before your interview today, and we have the ECB today. So
yeah, why don't you grab the screen, buddy?
I will. I actually just took some of my dollar yen short off. Here, I'm actually just up.
Nice trading on the short side.
Thank
Ticked
you. I've been aggressively shorting this thing over the last week and a half, 2 weeks, and I on this bounce, I've got here. I'll do this for you guys. Just so you guys can see what I'm doing here. So this is well, first of all, this is the chat room, because I was just uploading the chat room that I took I'm writing, I took a quarter of my dollar yen short off at support. You can see my position where I'm short, my average, because my cost average is 133.55, but that's going to change because of FIFO. So as soon as I get out of this, my position size is going to change. So anyway, that you can see I was short dollar Swiss overnight, short dollar yen, short some euro New Zealand as well. And you can see I'll update those positions. So does like Kman, and so do our other traders too. There's brands in there, and Raphael, and a lot of us are Nick, we're all in these chat rooms updating our stuff. So when I'm doing it, I do it live. And you can see the dollar yen, I'm closing it just as we get towards the support, just a little bit, because I do think we're going to break down. Just for if you guys any of you are trading the dollar yen, I'm looking for a move. Let me show you two moves that I'm looking for, just so you can say, oh gosh, I remember, when Blake was talking about that. I'm looking for a move below 130, because I would ask somebody asked me this morning in the chat room, where am I targeting? I'm like, well, below 130 initially, but where I'm really targeting, just so you guys all know, this is much lower levels. So just FYI, I know Kman might have something to say about this one, because this is going to be something that sounds a little bit more on the borderline ridiculous for some people. So especially with incoming BOJ, but in the event we see some like really, really intense risk aversion, or we see a complete 180 shift into USDJPY, long term over the course of the next year, looking for a move back below 115 if things start to pick up to the downside. But that's neither here nor there right now. That is something that just is on my radar longer term. I'm still targeting below 130.
After 130, Blake, I'm looking for about 145.
You what?
After 130, I'm looking for 140.
Well, hey, maybe that happens. I mean, you never.
But
you
I
never
like
know.
that 130 target. It's nice.
Yeah, I think that's what it's like, one step at a time, and that's kind of what I'm looking at.
That
right
means
now.
yields are going to drop another 30 bips or so.
Yeah, you got to imagine what yields are doing, and really, it's all about the BOJ. And I'd love to hear what Kman has to say about that, just because Kman was in Japan for so many years as a bank trader, really focuses on that. But before I do that, I want to hear from the team what your thoughts on Stelios. We heard your thoughts about the ECB, right? You think you think they're going to go 25? I agree with you. I think they're going to be more dovish, because it doesn't just be if what she says matters today. Hawkish or dovish, it doesn't really matter. It's actions that matter, right? So she's still raising rates for inflationary reasons. She can talk down future rate hikes to calm down the markets. Doesn't mean she has to do anything about that. Doesn't mean she doesn't have to raise, or she can't raise another quarter point in a couple months from now. So my opinion is, just like you, Stelios, it's going to be a quarter point hike, and she's going to be more dovish. But again, because it doesn't hurt to be dovish or hawkish. Remember, that's how they frame things to settle markets. So anyway, that's my view there. Ryan, what are your thoughts?
Blake, one more thought. If the ECB do 50, that means that in their opinion the situation is contained, right? Because they will have been speaking to the banks, etc. So I think that's going to be a very strong signal to the markets if they do 50. I don't think the market is going to like it in the short term, but I think it's a strong signal that things are not bad in Europe.
If they raise 50?
Yes, because that means that
things are worse.
No. I think in the short term, the market is not going to like a 50.
But
I
then
think
you buy the
it's
dip, yeah.
I think it's a signal that the market's actually doing okay in terms of the banking sector.
Yeah. I agree with that. But like I have to go back to these rate hikes at such an aggressive rate are really starting to have a very negative impact. And you got, I mean, Credit Suisse is not the only weak European bank link out there, right? I mean, we just named off a few. So anyway, that I agree with you. I don't think that's going to happen. But shoot, I've been wrong on these.
That's why the Fed has to raise at least 25 to show that they're not panicked.
Yeah, the Fed definitely has to next week for sure. They have to, especially if they want to continue to contain inflation. What's his name from? Oh gosh, I'm trying to think. Pantheon Macro. When I traded for Gellis, Gellis was one of their private clients. The guy would come by the office. The guy, he's always on CNBC, and we'd meet with him. He thinks that the Fed can pause, and the market knows that he says the market already knows that the Fed's going to fight inflation, so they can pause. And I do not agree with that. I just don't agree with that. But anyway, but that's what makes a market, right? Are all these different opinions. So
you're in Larry Summers' camp.
Yeah, I am in the Larry Summers camp. That is 100% correct.
I like him.
What do you think, Ryan? I heard some of the Flow Show, which is such a nice thing today to be able to do, is to, with the time change. It won't happen in a week and a half, but being able to listen to you guys for a few minutes when I get up in the morning has been really nice. So what are your thoughts? So, because I missed them, about the ECB.
I'm 60-40 that they go 50.
Really? So you think they can still go 50? All right. Okay.
Yeah.
Okay. All right. What do you think's the best trade out there? How are you going to trade it?
I think Euro's pretty clear on this. Not hiking will be a definite seller. 25 may be a modest seller. Hiking 50 will be a buyer.
Okay. Dale, you were talking a little bit about gold.
Yeah.
And the future move in gold. I met with Chris Weston. We did the trade-off last night, in case you guys missed it. He's looking at this as being a big head and shoulder pattern in euro, inverted head and shoulder pattern in the dollar index. Just something just to keep in mind. It's not something I'm really paying too close attention to.
What would that measure? Parity?
I would measure a lot.
Parity, right?
Yeah, it would measure quite a bit. I mean, if that really played itself out, which head and shoulder patterns are pretty common to know that they don't, they get stopped short a lot of the times, but it can help be a decent guide. That breaks us, back below parity or, right to parity. So it'd be something.
I think he's right.
Yeah, Dale, wasn't that what Joseph Wang is looking at too?
Oh, really? Joseph has become a technical analyst?
No.
Oh,
but last time I interviewed him,
that I wouldn't.
Yeah,
I haven't listened to him in a while.
Yeah, he was bearish S&Ps the last time we had him on, and bullish a dollar. So he was right.
Oh, wow. Well, he's been bearish for a while, so it's going to be interesting he's in the Fed's losing control camp for a while. So we'll see what happens there. That's
really
interesting.
I thought he was a Powell fan.
Yeah, I think so. Well, with his his connections with the Fed.
Anyway, hey, real quick, my recommendation is to copy trade Ryan and Kman and Blake and take some time off. I'm just going to copy your trade.
There we go. Hey, we do have some data coming out here momentarily, right?
What?
So
30 seconds.
Yeah, let's take a look at this data. And then, Kman, I want to get your thoughts before we pass over to Dale. Let's see here. And this, oh man, I don't want the euro there, but let's just keep an eye on yields. Oh, you guys should I don't know if you guys are watching some of the patterns and yields. Woo-wee. All right, here's the S&P. Here's yields and the euros over here. But all right, here we go.
All right, let's go.
Let's go. Some Canadian data
Building
out.
permits
Strong
better.
housing.
Better. Let's see Philly
Yeah.
Fed. For me, that's a big one. But housing is good.
Okay, let me make an adjustment here.
Maybe for you it is.
Come on. Where is it?
It's always slow.
Andrew O'Connell, thank you for your patience.
All right. Well, as we're waiting for that, you guys scream out the data when you hear it. Yields are popping a little bit. Dollars popping just a hair. S&P's me. So, Kman, what are your main theme thoughts into the ECB today?
Yeah, I identified about 7 or 8 possible scenarios this morning. But,
on the flow show, sure.
It could be 25 or 50 if they do 25 to signal some trouble, but I would say it's either a hawkish 25, that's my idea. Either a hawkish 25, saying that we are aware of
minus 23.2. So that's worse than expected.
Okay.
Sorry.
Oh, that's actually, yeah, that's about the
Dollar's
same number as we
weakening.
had last time. So a hawkish 25 saying a little bit less now because of the banking, whatever, and then we start to do 50s again, or a slightly dovish 50. That's what I think. But my initial idea is that any dip in the euro, unless they go completely zero and panicky, a dip in the euro today could be bold, actually, euro dollar.
All right. Well, then, yeah, we'll see how it acts if we get back to 105 and a quarter. I think that's going to be really, really critical today. So you guys just keep all that in mind. I want to say thanks everybody for being here. Thanks for our guest and his patience of waiting for Dale. And I want to say, if you guys haven't checked out the ForexAnalytix community, make sure you do so. One of the best ways to get involved in it is actually if you want to start trading our money, because if you trade our money, you're going to be included in the ForexAnalytix community for a period of time based on what type of assessment you take. So you have to take an assessment, and you can see all the different account values there. But when you take this assessment, you are inside of the ForexAnalytix community, like I said, for a period of time, because we don't want you out there trying to do it yourself. Come with us, be with our community, be with, all the guys that you're listening to right now. They're all inside of the community, plus so many other great minds and traders. So check out the trader funding program. All right, Dale.
Surround yourself with traders better than you, and you'll rise to their level.
There you go. Bingo.
Don't stick around mediocrity.
All right, guys. Well, hey, thanks everybody for being here today. Good luck at the ECB. Dale, have a great interview, and thank you to
Blake.
the guest for his patience.
All right, thank you, Dream Team. Ryan.
Cheers, guys.
Kman, I know you have a black belt when you were in Japan. I know it. And, that's why I'm nice to you. And Stell and Steve and, my FX family. Thank you, guys.
Thank you,
Andrew,
Dale.
welcome back, Andrew. Nice to
Morning, Dale. Thank
be
you so
back
much
in
for
touch
having me
with you.
back, man. How's it going?
Going good, Andrew. What's top of mind in the middle of a financial crisis for you?
Yeah, oh my gosh, where do we begin? Should I share my screen?
Yeah, go ahead.
Yeah, let's take a look. Yeah, there's a ton going on. Let's see. Let me know if you can see this.
We got it.
All right,
S&P.
so yeah, so pretty much we had this banking blow up.
Yep.
And for me, just to preface, I'm an active trader. I trade stocks and options. I'm competing in the US Investing Championship this year, so I'm reporting my results every month. So all this stuff is super, super important to me as a competitive trader.
Okay.
Yeah, so I think where we're at right now, obviously we had these bank blowups, which is really bad stuff. And we're in a situation where there's a lot of headlines flying around. There's a lot of narratives. I think it's very easy to get lost in the sauce of all these narratives. But I think my major takeaway is the Federal Reserve stepped in very, very quickly. It was an almost immediate reaction. And they basically said, hey, we're going to bail out these banks. So now I think the big question moving forward is we have this Fed meeting that's coming up in about a week. And what is the Fed going to do at that meeting? Are they going to now pivot because they've bailed out these banks? Are they going to hold strong on their fight against inflation, et cetera, et cetera? So if you look at this chart that I'm sharing with you, Dale, these are the Fed fund futures, and these are going out several months into the future. So like, we can look over to this one. This is the March 2024 Fed fund future. This is just telling us, hey, the market believes that the Fed funds rate is going to be at XYZ level in March of 2024. Just 1 week ago, this thing was all the way up at around 5.36%.
Yeah.
Now we've cratered, and this thing is all the way down at 3.76%. So the market's now pricing in that the Fed funds rate about a year from now is going to be significantly lower than where it is today. So the major thing I'll be watching,
slightly above where the 10-year is right now.
Exactly. So the major thing I'll be watching is when the Fed comes out, do they start talking these back up and say, hey guys, like, I think you got a little carried away. Even though we have this banking crisis, like, we're still going to be moving forward, or do they comply with what the market is priced in? So this is really what I'm watching on my screens. These Fed fund futures, what do they do? And I think other than like exogenous
don't you think they
shocks,
have to maintain, for them just to pause and not raise rates would be a signal to most market participants that, you know what, the Fed is worried and the Fed is scared. I should be too.
I think it definitely would be. And I think for that reason, they're going to do whatever they can to save face. And even if, like, let's say like they're pretty much done tightening, like let's say like they do 25 bips in March and then they're pretty much done. I honestly think it's much better for confidence to go ahead and do the 25 than just do 0, because to your point, I think that would really worry the market if they didn't do anything. So let's see what's currently priced for this meeting coming up. Yeah, so right now it looks...
I just want to say something about, about the Fed. And, what's going on now is the Fed is being blamed for people that were, did not manage risk at all, that stayed long bonds where any, 1-year technician would have been able to recognize that the bonds were in a bear market. So is it really the Fed's fault that they raised rates, or was it the management of staying wrong too long really the problem? It's not like the Fed wasn't telegraphing to all these banks that, we're going to be raising rates. You would think they would say, well, maybe we ought to hedge our portfolio or shorten duration. If we're wrong, we should get out. So, I mean, is this really the Fed's fault, or is it the ignorance of malinvestment of people with big responsibility at banks just to sit there with an overvalued instrument as it was? Rates were not that low since the Civil War. So it wasn't like they were sitting on value. So, I really don't think this is the Fed's fault for raising rates. I'm not saying that it's great that they had to do it because they stayed loose so long, but I don't think you could put this on the Fed because people stayed in the wrong position with billions of dollars for a year during the largest magnitude move in interest rates that I've seen in my career. What do you think about that?
Yeah, I think it's tough. I mean, myself as a risk taker in the market, someone that's making and losing money in these markets every single day, I'm pretty sympathetic to other people, like when they make mistakes. I think there's been so many mistakes that have been made along the way. It's not the Fed's fault that we had a pandemic. It's not the Fed's fault that we had this Russian invasion of Ukraine. Some of those shocks, obviously, those aren't their fault. I think
how can you stay long bonds when, they just kept breaking down and breaking down and breaking down.
That's a great
How
point.
can, how can you do that?
Yeah, I think what it likely was is, even the Federal Reserve, they said, "Hey, this inflation is transitory for so long." And then
Yeah.
of course they changed their tune and they said, "Hey, this is much more serious." But I remember like last year, almost every single month, most market participants were really looking for things to just quote unquote go back to normal. And I think
It's-
interest rates were low for so long that I think
yeah.
most investors and probably most bankers as well just didn't really believe that the Fed would get up to these levels and that they would stay there for this long. So it almost becomes like a pain trade. Like I'm sure many traders have experienced. Like you just stay in the trade and you're like, but it'll probably turn back around as soon as I close, so I can't do that. And here we are now. Things have just gone so far. And yes, some of these banks have
Thanks for
really
letting me
imploded.
include my tirade in your
Yeah, no, I
interview
mean, it
today,
makes a lot of
Andrew.
sense. I think it's just people that are sort of in disbelief as to how far these rates have gone.
Yeah.
It's
So,
yeah, it's a tough
so
situation.
what are you seeing? And I know, so for this trading championship, God, was this the one that started a long time ago? David Ryan, that's how he made his rep in that trading championship.
Exactly. Yep. So
Okay, yeah. See, my
it's
memory still works, even though I think I have old timers.
yeah, so
It
this
still works.
competition, you're spot on. David Ryan was in this.
Yeah.
A lot of really big traders. I'm competing in the division where we can trade stocks, options, and futures. And yeah, the
Cool.
competition started Jan 1, and we're reporting our results every month. And we are, we'll see how it
How you
goes at the end
doing?
of the year. What was
How
that?
you doing? How are you doing the first quarter?
So
That's
far, we're
almost over.
having a blessed run, to be honest. So
Nice.
I think January, like if we just go over here real quick to the charts, January was such, I don't want to say an easy month to trade. It's never easy, but I'm sure you remember like everything was
Yeah.
going up in January.
Yeah. Right.
So yeah, we were able to take advantage of that. We put up a 39% return in January. And then I think the big trade, and this is something that, I was sharing with my clients and my subscribers, was I think this is the SPY chart right here.
Yeah.
Things went way too far too quickly in January. And if you
Yeah.
look right here at these candles, you can kind of see as this thing goes parabolic, like the shape just gets way more vertical here. This right here was when we started to actually get short the market right in this period right here between maybe like 4,100 and 4,200. So we were able to have a positive month in February as well. So right now, I reported my results for February. We're up about 48%. So we're having a really good run. And honestly, my game plan for March with all these bank failures has been, hey, let's not get obliterated in March. If we're thinking about this contest for the entire year, is March when all these banks are blowing up? Is this going to really be when I make my nut for the year? Probably not, but there's a lot of risks out there. So
Okay.
for
So
March,
you're
I've been
taking the
trading a lot
approach
smaller.
that, everyone came in when the SVB thing happened and said, Coach, what should I do? What should I do? And they're thinking, what should I buy or sell?
Mhm.
Isn't another option nothing?
Exactly. And the money market rates are so high right now that, I feel like it's almost a cliche. Everyone is saying this at this point, but you are being paid to be patient. So, like, if you are just not feeling comfortable in the market, you can go into like a Vanguard money market fund, which is what I use. Vanguard's my alma mater. I used to work on their fixed income trading desk. Yeah, you can collect like a 4.5% yield while taking no risk. So, yeah, I've been leveraging having a cash balance. I think it's been great for traders where, yeah, you can still trade, but you don't have to be like FOMOing in because, yeah, you can pick up a decent yield just being in cash.
Okay. So, so you want to, you're a little bit of risk aversion right now. So, any ideas that are actionable going into the Fed next week? Or you just
Yeah.
wait for all the dust to settle before your next time you assume risk?
Yeah, so I do have some trades on the books. And to be honest, I think that's the best thing. If you approach the market being risk averse, like this week, I was like, all right, there's no pressure to make any money, but I will be disappointed in myself if I have a big drawdown. That was really my goal. And sure enough, if you're patient enough, you do find some opportunities. So one that we picked up yesterday was Charles Schwab. And I'll show you what's happening here. This is more of like an event-driven trade. This isn't like a trend trading trade or anything like that. But take a look. Charles Schwab has gotten hit with this banking run, right?
Yeah.
Well, look what we have here. So this was, pull this
That's
over.
a broken chart.
Exactly. So for this one, and I noticed this as well, if you're a trend trader, like you're using your moving averages, like that sort of thing, this is really an environment where there's really no trades for you. If you trade events and things of that nature, there are some opportunities. So this was something that we posted in our Discord the other day. Check this out. We got it right here. I'm going to open it in the browser.
How many people in your Discord room?
Right now, it's about 40 of us.
Okay.
So yeah, it's a nice group. I love everyone in our Discord. Really, our philosophy is like, we're in this, I'm competing for the year, but honestly, like we're in this for a multi-year time horizon. So I find the best people that work well in the group are people that share that mindset. Take a look here.
I'm a big believer in communities. Yeah.
Exactly. Yeah, you guys have a great community as well. So take a look at what we found. Charles Schwab, CEO, says clients poured in $4 billion at the height of the SVB panic. They had significant inflows. The CEO bought shares. Again, there were $4 billion of inflows. And look at this right here. Schwab's 12-month liquidity level was equal to nearly the entire banking operations deposits. And the CEO came out on CNBC, was pretty much like, guys, like we've had inflows in this and like everything is fine. Like we're really not involved.
Yeah.
So for this one, when that Credit Suisse news dropped yesterday, we were able to pick up Charles Schwab right around this like $56 mark.
Yeah.
And so
could
this was
rally back to what, 70 or so? Is that what you're looking for? Like
yeah. So honestly, for this trade so far, we're sitting on like a 7% gain, which is awesome.
Nice.
Yeah. I'm sure, it doesn't always go that way. But take a look here. This 10-day exponential moving average is right around like 64, 65 bucks.
Yeah.
In this
You'll take
environment
it there.
Yeah, I'll probably take at least a good piece. Honestly, if we have like one more good day, I'll start peeling some off of this because I don't want to get like married to anything in this environment because who knows what headlines could come out. But
Yeah,
Mhm.
It's hard to do anything much more than one night stands, huh?
Exactly. Yeah. So
Let
anything that
alone
you
get
can
married. Maybe you'll
exactly.
find something to date after the Fed. How about that?
That could be. Yeah, I
Or
think
even get engaged to,
perhaps we'll see. Yeah,
but
like
no proposals. You're
no,
not. Andrew's not getting down on his knee with a diamond in his hand in the markets.
not yet. No, yeah, no diamond hands over here. But I'll show you one other thing that's really interesting me, Dale. This is, I think, really cool. Check this out. So this is again, like would be more of like a longer term thematic trade. So the way that I see us in this cycle right now is, okay, we've been in the tightening part for about like a year and a half. So, okay, the Fed's tightening, they're fighting inflation. We're making progress on inflation. We're not there yet. But now we've hit this point where the Fed's pretty much broken the system and we may or may not be backing off of that tightening as we saw in this chart earlier. So if I'm thinking about this cycle and the way it goes, typically you go from tightening to no longer tightening, and then you go to easing. So check out this chart right here.
Yeah.
And this, for whatever reason, is highly controversial. I don't know why. I think just because it's Bitcoin. but this is a correlation analysis that I did on Bitcoin and the M2 money supply. And what I found was if you take the M2 money supply and you lag it by a year, there's a 0.72 correlation with the price of Bitcoin. So pretty much like if you think that the M2 money supply is going to be higher a year from today, that's where, according to this correlation, you would want to be adding a position in Bitcoin.
Did you buy that dip at 20?
So I'm long Bitcoin from 23K. That's my cost basis. I've been adding a position, but I did actually add to my position yesterday after running this analysis.
Okay.
So take a look here at the chart for Bitcoin. Check this out. So if we go to, looks like S&Ps are kind of slipping a bit here.
Slipping and sliding. They're going to bottom into the next week into the Fed and the equinox.
Yeah, that would be great.
Yeah, we'll see. So look for inflection points next week.
Yeah, I definitely will be. Take a look here. So Bitcoin, if you look at the structure, the structure looks interesting here. We're breaking out above this consolidation. We're kind of probing it. It's not like we have like a full-on breakout yet.
Okay.
But yeah, this looks very, very interesting, especially given where we are in the cycle. I know some people will say there's no way the money supply is going to go up in a year. Like the Fed's tightening now, but things in this environment are very fluid. If you had asked me a week ago, is the Fed going to step in with a liquidity facility for banks? I'd say no way. So yeah, I think that's why this asset is
the world
starting to
changed. The world changed.
Mm-hmm. Yeah, and you've been in this game a lot longer than I have, so I'm sure for you, like you can see a lot of, like, what are you seeing in terms of the way things are shifting? Is this similar to things that you've seen in the past, Dale?
It rhymes. It rhymes a little bit with 2008, but I think it's at a different level. I think it's really just about rolling debt and liquidity issues, and the Fed's going to be putting their thumbs in the dike, and they may be able to keep the whole thing going for a couple of years. But I think there's one more flush in the market into the summer, June, July. I'm looking for about 3,000 on SPX and looking for a rally from up to about 4080, 4100 to reestablish long VIX call positions. So I think there's one more good flush, and then I think we have a good market for a couple years.
Yeah, that makes sense. The levels I'm watching, to your point about the ES, and really this is as like a tactical trader. So with that Fed meeting coming up next week, I think that if we don't get any more bad headlines, and that's like a big if, I believe there could just be a ton of gamesmanship that happens in this tight little range we have going here.
We could take out the lows one more time, and it won't confirm momentum wise on a lot of stuff I'm looking at.
Exactly. So like I see there's traders that are really into the macro. Like if the market goes up even like 0.5%, they're like, how could this be happening? There's a banking issue going on.
Okay, here's a new paradigm. I feel like I'm being, well, I do this all the time anyway. The new paradigm, besides the fact that there's no Fed put anymore, is that you have to learn to be a tactical trader.
Definitely.
Because try and find trends, and even within the trends, if you don't learn how to book things and ring the register, you're going to be seeing a lot of gains being given back. So you have to learn to be tactical. You have to know how to trade price action, bottom line. Inflation, deflation, any economic condition that the globe is in, you have a playbook for it, and that's price action. That's my playbook, even though I get it wrong quite a bit, but that's still mine.
Exactly. Exactly. Likewise. So
in
this little range here, I see we have the 20-day simple moving average right above us, and it's really not that far away at this point. It's at right around 39.82. I think that level is in play. So like for me, I have a couple test trades on the long side. If we hit that level, I would probably just start booking them because I'm not really expecting a whole lot. And then down here, we have yesterday's low right around 38.65. And then beyond that, we have the low from a few
38.
sessions ago.
Yeah. Yeah.
Right
So
around
maybe it
38.40.
flushes under 38 and then turns.
Mm-hmm. So we've got some levels.
So are you looking for people to join your Discord room?
Exactly. Yeah, we
Your
run.
model.
Yeah, so we run a Substack, and you can check that out right here. So this is pristinecapital.substack.com. I absolutely love writing this. This is a nightly piece that goes out. This is a great research note. We also do a weekend market analysis video. For right now, anyone that signs up, we're also going to add you to the Discord as well. So yeah, definitely feel free to join, especially if you're a price action trader and you think about things, even if you're a short-term trader, if you have the long-term mindset, then it's for you.
Andrew, I want to thank you again for coming in. I'm rooting for you in the contest.
Thank you so much, Dale. Yeah, I'll keep you up to date as to how everything goes for sure.
Okay. And why don't you wrap it with one piece of important advice for traders to keep in mind during these tumultuous times?
Yeah, one piece of advice is I was looking at the S&P 500 and year to date, it's only up about 1%. As crazy as that sounds for all of these moves. So if that's your bogey, if you want to at least do as good as the market, maybe do a little bit better, the bar for you right now is so low. So I really think like you don't have to be a hero. You can lower your expectations for yourself. I think a lot of people are putting pressure on themselves to be able to predict everything that's going to happen in the banking system. So I think that people that put the least amount of pressure on themselves to absolutely dominate the market are going to be the ones that make it through this to the other side. If you put too much pressure on yourself, that's where things will go awry. So I would say just relax, enjoy the show. And honestly, this is a great learning opportunity for all of us. So just enjoy it. If you're too overly exposed, you really can't learn a whole lot because you're just going to be stressed out. So that's those are my parting words for anyone in the audience.
Okay. That'll give you longevity too, because you'll save your health.
Exactly.
And appreciated my trading warrior brother, Andrew O'Connell, everybody. And follow Andrew where on Twitter at Pristine Capital.
Yep, at Real Pristine Cap.
At Real Pristine Capital is where you'll find Andrew on Twitter.
Yep.
So good talking to you again. Thanks very much, Andrew. Good hunting and great advice about take the pressure off.
Exactly. Thank you so much for having me, Dale. I really appreciate it. And we'll talk soon.
Buddy. All right. That's it, everyone, for F.A.C.E today. We'll wrap the week up tomorrow, and you could join the team in 15 minutes, 17 minutes on the Morning Edge. Glad you enjoyed it, George and Sinatra. All you guys, don't just count your pips, count your blessings. I'll see you to wrap the week tomorrow. The team and I will be here. Adios.